What's going on? Welcome back to the channel. Today I want to talk to you about ChargePoint. It's been a while since I've done a ChargePoint video, so I'm going to go over some of the data points, what's been really moving it, and when I see it moving finally higher from here. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So starting off on Friday, it was relatively flat. In fact, ever since March, for the most part, it's been sticking to that 60 to 70 cent range. So very surprising stuff. Like I said, I haven't really covered it all too much, but one thing that has actually kept it afloat, luckily enough, is the broader market. It's been very optimistic. A lot of stocks hitting 52-week highs. So that's been one thing that's actually kept ChargePoint afloat. There's been some abnormal things that's been happening recently that I wanted to share with you. But as far as specific to ChargePoint, there was this that kind of spooked the market. So they did announce a reverse stock split as of July the 28th. So this is to rectify a deficiency with the New York Stock Exchange. It is going to be a 1-for-20, and to be fully fair, I actually thought that this was going to happen much earlier than what this kind of played out. So I think at the end of the day, New York Stock Exchange gave ChargePoint a ultimatum. I know lately they've been fairly lenient, giving even horrible companies far more extensions than what they deserve. So I think ChargePoint kind of ran its road a little bit. But nonetheless, though, a reverse stock split, in case you do not know, all you have to do is take your shares divided by 20 and your average times by 20. That's going to be your new share count and your average. Pretty easy to calculate. At the end, it's going to be the same dollar value. When it comes down to the stock price, the actual authorized and also outstanding shares are going to be divided by 20, and then the stock price is going to be times by 20. So again, pretty easy to calculate. So as of July the 28th, there's going to be some changes, but I think the general rule of thumb, even though it doesn't logically make sense, but the general rule of thumb with reverse stock splits is that there is a pullback post reverse once it actually goes through, which again doesn't logically make sense because all you're doing is altering just some of the numbers behind the scenes. Still market cap and everything, fundamentally operations stays the same. So it's one of those things that I feel shorts have started to pounce and prepare themselves for, because even generally looking at some of the volume lately, it's been very low. Institutions haven't really been paying attention to it. So even on Friday, no transactions occurring on the secondary market. Dark pool, there was one, and most likely that was attributed to shorts. So there was also a amended form that did come out, a 13G, and it goes to show that BlackRock did return and sold off a significant portion of their portfolio. So they went from around, I think it was 40 million to 9.4. So institutions are selling, not necessarily the best what you want to see. But when it comes down to lower volume and institutions not really paying attention to it, shorts are able to dictate what does happen. And like I said, I used to cover ChargePoint way back in the day a little bit more frequently, and I think even at that stage, at the peak, short interest was almost like 30-something%. So when it comes down to recently, so for example, it looks like March the 17th, short interest was 30%. And at the low, it ultimately was around 13 to 14%. So shorts have really returned a significant amount. So ultimately, the reason why ChargePoint has actually been keeping somewhat at the price point it has since March is actually because of shorts. So this is why I like to look at a lot of the data and whatever else, because a lot of individuals might assume that it was institutions somewhat keeping it afloat, but kind of inversely, it was shorts. So I think they've been returning, mitigating risk across the board because of just the broader market kind of hitting all-time highs, many stocks as well. So when it comes down to post-reverse stock split, don't be surprised if shorts start to really double down again. So this is why you might see some crazy volatility with ChargePoint, but keep in mind, as I've kind of explained, what happens with the stock price versus operations, completely separate. So in my opinion, based on their last couple of earnings, it is going to be early first half of 2026. That is when you will actually start to see ChargePoint finally move higher. There was some pretty good updates lately, nothing really to like stop what you're doing and buy, but even on July the 2nd, This is kind of a good thing. Expansion is good, but more specifically from their earnings in June, that is where they kind of signaled that 2026 is onwards and bigger things. So as far as where I see the bottom, it will start to most likely, in anticipation of 2026, start to move higher in Q4 2025. And I get ChargePoint has different quarters and they kind of do it weird, but nonetheless, Q4 physical 2025, that is where I do feel that ChargePoint might start to finally move higher. But again, based on everything that I mentioned, I do feel that there is a little bit more pain coming before things do get better. Like I said, shorts just in among itself, which has largely been dictating what has happened with ChargePoint price-wise for the last almost 2 years. They're kind of playing a game. Currently, 15.87% of the free floats being shorted, works out to be 67.64 million shares overall are being shorted. Even on Friday, shorts did increase 1.28 million shares. So they overall make up a huge chunk of the daily volume. So this, again, it's something just to keep in mind that most likely they will be really doubling down. As far as the options, you have 44,000 in calls, 3,000 or 3,800 in puts. 44% of all the options on Friday were bullish in nature. So definitely good to see as far as that. Options hasn't ever been that popular for ChargePoint, but based on at least the bulls, you see a consensus for it to get above $1 by August the 8th. That would not be because of the whole reverse stock split. So if you do have options, that does skew them. So if you currently hold options, that is going to be only, you can't buy any more of that actual chain. You'll be able to sell it. So reverse stock split does skew a lot of this, but bears are anticipating for it to be sub 50 cents. Again, not factoring in reverse stock split and everything else. With it right now at 62 cents, if you are for whatever reason wanting to day trade, swing trade, or wanting to average down, it is trading between this S1 and this S2. So in comparison to a lot of other growth stocks, ChargePoint definitely is lagging, but 59 cents is going to be a strong support, followed by 50 cents. Flip side, 65 cents, and then 74 cents is going to be the next strong target / resistance points. And then lately, there hasn't been all that much in analyst ratings. All of these are from their last earnings. So you had 65 cents, 20 cents, 50 cents, 75 cents. As a consensus over the last 3 months, you have 98 cents the price target, and that works out to be a 57.08% downside. So at the end of the day, ChargePoint, I feel like, has a lot of good potential. It just, under the current administration and just lack of institutional investors really wanting to get in, that is what's really plaguing it. So let me know your general thoughts. This is on a side note, a little bit more of an overview of the current ownership. Like I said, I'm giving you a full kind of breakdown and everything, but institutions did reduce their position quarter over quarter. So from Q1 to Q2, since Q2 just concluded, they reduced their position by 15.84%. Strategic entities did increase their position by 55.26. So again, some people might think that's a good thing. On the other hand, it's good for the business itself and operations and whatever, but coming from an investor standpoint and that cares about the price, seeing institutions exit is never a good thing. So let me know your general thoughts. Do you kind of agree that 2026 is going to be kind of where things start to finally get better for ChargePoint? And of course, in anticipation of that, it would kind of start in Q4. Do you think that's going to happen? Or do you think that ChargePoint is just on a slow bleed to death? So what's your kind of viewpoint on all of that? And if you are buying, are you going to be buying before the reverse stock split or after? So let me know your general thoughts. One final thing, if you are looking for some solid buy signals, pop over to my Patreon and get buy signals on stocks, options, crypto, many of which have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.